Good morning, traders. Welcome to the TMT Stock Market Strategy video for Tuesday, February 28th. Last day of the month. We're going to have, or we should have, some mutual fund inflows that do step in 1 or 2 days before the last day of the month, and then probably preceding the first day or two thereafter. And then we do have some mid-month inflows that do come in. Is it going to be a factor? Not sure. We'll see what happens for today. We do have Donald Trump making his first State of the Union address tonight. That's going to be really, really important. For those of you who are active traders, you really should be watching. And even those of you who are new to the game, you should be watching. Remember, guys, the market has not literally have gone down since the 2009 lows. I mean, we've literally had every year increases since then because of our favorite Federal Reserve and our central banks around the world putting money into the market, creating that wealth effect. So learn from it, and we'll see what happens tonight. It's going to be very important moving forward. Remember, the market has moved up on anticipation of what Donald Trump is going to do. Okay? Any further delays on his promises, or let's say they take a back seat, the markets will not like it. The markets are priced for perfection. And this is what is kind of putting an overhang of the market, is what I would say. You see in front of you is a 15-minute chart. We showed it to you yesterday. We've been in range. We've been range bound all of December, basically, other than the one day we popped up. And now we're on our 5th day, which we're kind of outside of the range, and yet we're not. We're still at the upper end of our horizontal trend line. And I'll show that to you on our scenario chart that we've been watching for the last week, and we'll see where that goes. The markets were down a little bit, and then we actually rallied again. So Dow Jones made 12 straight highs, and that marks history, because I think it hasn't happened in ever, or if it has, I didn't see the statistics. I think they were something like 30 years that it hasn't made 12 consecutive closes higher. I'm not too sure. I'm not going to quote that, but I did see on the internet and viable sources that it is the 12th consecutive close higher. Great. What does that mean for us? The market continues to be extremely overbought. The pundits and the retail continue to buy. And remember what I mentioned last week, that we said that the mutual fund inflows have decreased, and buying of inflows of regular standard ETF have increased. So that tells you that the retail public are doing it on their own, or the majority are. So that's also not a good sign that any hiccup in the markets can literally start moving lower rather quickly. Okay, not the case right now, but it's something that I want you guys to be aware of. Remember, protection is cheap, meaning the VIX. The VIX is extremely low, at historical lows. You need to pay attention to that. Don't let your wealth management portfolio, your wealth account managed by Merrill Lynch, what have you, Morgan Stanley, or any of the big firms, say, oh, don't worry about it, ride it out. Why would you want to ride it out when you've made all of those gains? You've risked that money. Protect yourself by buying puts, selecting stop losses. I mean, there has to be something that you guys can do, because we don't know when it's going to happen, but you cannot go straight up above 2.5%, probably 2.8% now above a normal standard 21-day moving average on a daily chart, and not get some sort of a rubber band effect where we get a pullback. So just keep that in mind, guys, going forward, okay? Next, let's get right to it. We're looking at our same culprits at the moment. We have dollar continue to base underneath the 26.15. It is a critical juncture. It is resistance for the moment, and I do think we'll take these two swing highs out at 26.25. Once we do that, we'll challenge the highs, and then we would reevaluate the dollar. The dollar, remember, is very important. Even if you do not trade the dollar, it affects equities, at least equities. At one point, when the dollar gets really strong, it'll hit the multinationals, and then of course the commodity sector, it'll hit that even harder. Okay, so if you do trade commodities, gold, silver, precious metals, grains, something that you guys need to take advantage of and watch, because it does give you guidance on what to do. We have the TLT. Again, we've been in range bound really since November, since the mid-November, and we've been doing nothing but just popping along. Remember, watch the USB weekly. We were sitting on the 148 level in the USB. That's the weekly chart. It's a 200-week moving average. A break below that, you're going to have to give it really 2 weeks closing below the 148, or breaking above the horizontal consolidation that we're in now, above that. Then I think that you're going to have a directional change, and then we should go higher, okay? But I do think that unless something really happens as far as fear is concerned, then I do think that the TLT will rally, bonds will rally, but then ultimately it would be just a retracement rally, and then would sell off again at one point. Would create a great shorting opportunity after the fear is gone in the markets, okay? Right now there's no fear, and there's no real reason to buy bonds because rates are holding steady. GLD, I mentioned yesterday, I said, look, be careful. We're sitting here, we got a nice rally. Yeah, there was some fear in the markets, right? We had a couple days of VIX was up, so they're buying gold. I am not convinced that we're going higher. Yes, we have a great retracement. That retracement, we tested the higher low. Everything looks great here, guys, but gold is notorious for shaking out the week longs. And remember, commitment to trade reports are showing now that we're getting greater and greater short. The producers are getting better short at the moment when they were getting long here, okay? And here is the divergence that I showed you. Remember, yesterday I said, guys, we're diverging. GDX is diverging from gold, okay? And I stated that in the video. And here's the Pro Trader Premier video levels, and you could see I didn't have this yesterday. So if you want to go back, look at yesterday's video, and you'll see they weren't there. And our Pro Trader Premier subscribers know about all of these levels, and I'm throwing these out there for you guys. It's free. Come sign up. You would really appreciate the levels. They chart actually really speaks out to you, knowing where resistance and support's going to be. So this inverted head and shoulders right now is still in effect. However, it's getting to a point where if we get down a little bit more, this is going to be invalidated, okay? It's going to be negated. So just keep that in mind. Spiders, what can we say? We're riding the rail, right, on the upper end of the trend line. Extremely overbought. We're 5 days into a horizontal area of resistance, or I should say inside days. And we're still looking for a pullback here at one point. Now, here is our scenario chart to play out. And let me just put that right about there. And as you see, we're still riding that upper end of the rail. Now we could do that all the way up until the middle of March and get to that 240 point. My guess, and right now it is just a guess, and basically this is purely driven on sentiment. You could throw all of the technicals out the window to a degree. Fundamentals you could throw out the window. I mean, it really doesn't even mean anything anymore. Overboard, valuations, PE, throw it out the window, guys. EBITDA, it means nothing right now. Right now, generally speaking, to the market, because the markets are so ridiculously overboard, and people just continue, and I mean people, pundits continue to buy up here at a level where we came from literally within a month, almost over 10 points in the spiders, which is insane to me. And I would say, why would somebody want to buy a market that's extremely overvalued? If the stock market wasn't around tomorrow, then maybe. But right now it is, and I would not be looking at all. So either we ride the rail, right? That's the one scenario we're talking about, to get to 240 and then dump. Or we get our retracement pullback, right? We get our pullback anywhere around the 232, or even stopping at 234. A shallow pullback, if you will, and we get to that point where we get, let's say we get a shallow pullback. We just test this swing low, and then we go off to the races. We hit the 240 mark, and then we dump. Those are the two scenarios. We could even move a little bit lower and then ride the bottom of the rail, right, of our lower trend line, and still making higher highs and higher lows, and then either pop up one more time and dump, or we just dump and then get that retracement rally and then dump. So there's a couple of scenarios. There's actually a few scenarios to play out. One of the two will be valid. We're just going to wait and get more confirmation. But you could say extremely oversold, grossly overbought. I mean, there's nothing more you can say. Transports, IYT, we did get some good volume today, which was nice to see. but we did not break out. We're still divergent from the Dow Jones, so Dow theory is still in effect. IWM had a nice day today, no denying that. This is our free levels for you guys for a Pro Trader Premier video. And we're going to need to take out 140.35. 140.35, we take that out, we should be off to the races and move a little higher. I would not be looking to buy IWM here. For those of you who have a good risk appetite, if that fits into your plan, do as you wish. Me personally, I like value, and there's no value in any of the equity indexes at all. Okay, individual stocks, different story, but if you're looking at the indexes, they're grossly overbought, and there's no value to that at all. So, and tonight is going to be the deciding factor. Tonight, I think that if something does happen, or he does delay things, which is going to happen. I mean, he just can't do everything that he says he's going to do in a certain timeline. He still has to pass bills. Congress has to accept what's happening, and I think there's a rocky road ahead at the moment, and we'll see. And once everything is clear, look, if we got a nice little pullback, and remember, this is just November, guys. I mean, I can go back and you could see how crazy, ridiculous the market is overbought. Just forget about even November. And even in November, we were grossly overbought. How about now? I mean, if you get back to November's swing low and get that double bottom here, I mean, you're still in a raging bull market. It's healthy for the markets to pull back and correct, and so they can reset itself and create more buying pressure. You can't have that when the shorts are basically done. There's no more buying because the longs are really capitulated, as well as the shorts. You know, so I'm looking for that one more big spike up, that capitulatory top where the market gives us a blow-off top. Shorts throw in the towel. Longs can't buy anymore because they've been buying since 2009, and then there's really no more buying. And when that happens, you'll see lower lows and lower highs, and then from there you'll see a volume start to increase, and then you'll see a full-fledged correction. That's how it works. Right now it hasn't shown us anything other than we're consolidating. So let's see what happens tonight. It's going to be very interesting. Be careful out there. Please use your stops. Think about buying some protection for your long-term portfolio, and we will see you tomorrow.